Blackstone, they reported a 26% jump in second quarter earnings. It was helped by profits from its artificial intelligence related investments. Earlier, Blackstone president and COO John Gray spoke with Bloomberg's Danny Berger. He told Danny that the power of AI is being underestimated and that AI is creating new revenue streams.
I think fundamentally what people aren't getting is how powerful this technology is at companies. We're beginning to see real-time examples, certainly in customer service, in coding. It's now starting to move to the revenue generation side where businesses are creating new lines, new revenue streams using this AI. And I think because this tool is so powerful, there's an underestimation of what's happening.
All right, that was Blackstone president and COO John Gray speaking with Bloomberg's Danny Berger. Another AI bull that's a crowded room. Paul Goldberg joins us, Bloomberg Intelligence senior equity analyst. He covers Blackstone. So there, Mr. Gray, pretty positive on AI and what it may mean for corporate America and for Blackstone. What was your takeaway from Blackstone's results, Paul?
Thanks, Paul, for having me. I think very strong results generally across the board. You mentioned 26% increase in distributable earnings, but it's not just that. It's the 20+% increase in fee-related earnings and so on. There are three drivers that kind of fluctuate from time to time, from quarter to quarter, that drove those. The performance revenues, the fee-related performance revenues, and transaction fees, they fluctuate from quarter to quarter, where base fees were a little bit softer. But net-net, very strong, broad-based, very strong inflows. They had $68 billion of inflows in the quarter. If you annualize it as a percentage of a gross inflow rate, it's a 21% gross inflow. Obviously, there are some outflows as realizations happen and so on, but there is a very substantial demand from institutional investors in particular for alternative assets, and Blackstone benefits from it.
Alternative assets also includes private credit. What do we know about the private credit funds that Blackstone has out there? And because there had been a lot of redemption requests, not just for Blackstone's funds, but across the industry.
Certainly. To put this in perspective, out of the $68 billion, about half of it came from the private credit business. So it's still very healthy from the institutional side, and the wealth flows, even though they have been softer and might still be a little bit softer in the second half, but the headlines are receding. You don't have as much pressure, and if you look at the biggest, almost $100 billion private credit fund, the private BDC that Blackstone operates, BCRED, it actually had $1 billion of net flows into the fund. So things are not necessarily falling out of the sky, even though you've seen some of those redemptions, and they might continue a little bit in the second half.
Why are Blackstone, KKR, Cargill, the blue chips out there, why are their stocks down 20, 25% this year?
Well, I think there are several issues that came around with it. Number one, early in the year, we had some scare in the software space, right? They were concerned that software is overvalued, that AI is going to take out some of the software businesses, and that worked through the private space because they were heavily invested in software. Blackstone, for example, said today that if you look at it broader, some of the private credit BDCs, they have a heavy 20 to 30% exposure. But if you look at the bigger, large managers in aggregate, Blackstone only mentioned 6% exposure to software, so that's much smaller, but the market reacted to it, trying to figure out. And the other thing were obviously the redemptions from private credit that are sort of tied through the wealth channel to these software concerns.
We have about 30 seconds left, Paul, so just very quickly here. What do Blackstone's results mean for Apollo and Carlyle, which will be reporting in August?
I think they should be very strong. I think there was a lot of inflows. There was a lot of institutional demand. I would also add Goldman, BlackRock, JP Morgan in the mix with their alternative businesses. They were very healthy. Goldman had a record quarter of inflows.
All right, Paul, thanks so much. Appreciate it. As always, Paul Goldberg covering a lot of the financials over there for Bloomberg Intelligence, Blackstone with